Do you know approximately what the new rate will be? Well, I just know that the rate hike is going to be, I believe, it's going to be anywhere between a quarter and a half a point. We've had two rate hikes this year. Both of them were 3/4 of a basis point, 0.75%. I don't think it's going to be that high because people are already complaining. But inflation has not gone down. I mean, in some cases they say it has, but it really hasn't. No way to know until it's out. That's exactly we just don't know. I just think it's going to go up a quarter to a half. I don't think it's going to be another 3/4, albeit I wouldn't be surprised. I just don't think they're going to be that aggressive, but I know they're going to raise them. They have to raise it because inflation is still just too high. And for all, I don't know what you're reading, but if you read, the Department of Labor and Statistics, they're going to keep telling you it's 8.2%. I know it to be higher than that. They're going to keep telling you it's 8.2% until it drops below 8.2%. And then it'll be that number. The jobs report came in, of course, also on the 1st. That's doing pretty well. Pretty well. We were at 3.7% unemployment. So jobs is good. But again, on the other side, the jobs aren't paying people. They're not paying them what they need, a living wage, to cover all these expenses with everything being what they are. That means prices have to come down. The only way to make that happen is to mess with the supply chain, supply and demand. The only way you do that is make things really expensive. And if you make the money expensive, the goods are expensive. And if the goods are expensive, people buy less of those goods. Okay? It's just basic supply and demand. But when you're going through it, it hurts. You know what I'm saying? And when you're going through it, it hurts. Yeah, exactly. Christmas, for real. People are wanting to spend money, and they're going to do it. They're just going to run their credit card debt up, which will be a bigger problem later, right? Foreclosures, at the end of the first quarter of 22, at the end of September, foreclosures were up year over year, 219%. 219% year over year. That number is expected to double, potentially even triple, going towards the end of 2023. What does that mean for you and I? On the creative finance side, anybody that's buying foreclosures, we are in heaven. Okay? Now, we're not going to be able, so many people, and I'm getting calls, people are asking me, okay, what do I need to do? How do I need to go and buy off the courthouse steps? You're not going to get a whole bunch of stuff off the courthouse steps. And I'll tell you why. The foreclosure has to go through, right? They have to do those, whether it's a judicial or non-judicial state. But the people that are buying those deals are going to be the representatives of big hedge funds. They literally, here in Georgia, show up with backpacks full of money. Literally, I'm not exaggerating. Backpacks full of cashier's checks. And they're bidding like velociraptors. There's 3 and 4 of them, and you don't know who's with who, and you're getting outbid, and they're paying too much, and you're like, how can you pay that much? Because their exit is different than yours and mine. Hedge funds can function off 2 and 3% annually. We can't. We can't function off 2 or 3% annually. They can. They're also the ones that are dictating home values and rental prices, right? Because they're buying literally tens of thousands of houses. Those foreclosure lists will be taken by the banks in my area, at least. That's every area. That's every area. JP Morgan just put $1 billion to the side. I know you've heard it. Blackstone has already put $10 billion to the side. They just added another $1 billion to it. And by the way, if you haven't heard, people are pulling their money out of Blackstone. Blackstone, it's private, so they could do this. Just this week, they stopped people from being able to take money out of their fund because people are so scared of the real estate market. They don't want their money to go into real estate, even though Blackstone has an absolutely perfect record of what they're doing. Are you familiar with the term contract vendee? No, please enlighten me. Enlighten me about the vendee. Pardon me, I'd like to know a little bit about that. As we move forward, that's what it's going to be. That's what it's going to be. These big boys are buying bundles and bundles and bundles of non-performing real estate assets from the banks. And they're paying almost face value for them. Remember, BlackRock did it a year ago with Zillow's portfolio, and they lost 20%. 20% they lost off the top. I don't know how many tens or hundreds of millions of dollars that equated to them, because I haven't read their 10K. That'll probably be that loss will probably be represented this year. I'm very interested to learn what that is. It's estimated to be all over the place, but I can't wait to see what it actually was. So, but they stopped buying last November, and November 2nd, and November 2nd of this year was the 1-year anniversary, and they had already divested out of all of those assets. So that's where we are, and that's how we're going to do this, guys. I'm giving you everything you need to find success as a real estate investor. So make sure that you subscribe to this channel and like this video. See you later.